Hey everyone, CryptoVatsik here. Thanks for joining today. Nothing of what you're about to see is considered financial advice and they're just my opinions. If you do enjoy this content, I would really appreciate it if you give this video a like, and don't forget to subscribe to the channel for future updates. Let's get right into it. Okay, today's just going to be a bit of a market update. We're going to cover Bitcoin and Ethereum here. And we're just going to look at currently what's going on. So basically, I've shared this chart. This is my logarithmic chart that I've shared in previous videos before that ultimately just shows those major cycles in price, right? So obviously from our first bull cycle, first bear cycle, and so forth, all the way up to where we currently are. Just giving some high time frame perspective of where we might expect a bottom to form. So if you're interested to learn more about what's going on here on this chart, I do suggest going back and watching that video. I can share it with you up here as well. But ultimately, just to quickly recap, what's going on right now is that the concern was that we were starting to drift outside of the bottom band of the log curve here, the support level. And my expectation was there was going to be a period of some sideways accumulation within this green box here. Okay, so somewhere in here was going to be essentially that period of accumulation that we really need to see at the bottom of a cycle in order to push us into the next bull cycle. So currently, we did drift outside of the lower band here. Okay, the lower band, the support line of the log chart for about 7 or 8 weeks here. So that's fine. It doesn't mean that we can't. Clearly you want to see it held. We have dipped below it before in the past, very briefly. These are weekly candles, these wicks coming down. However, you'll notice that we basically came back underneath and we just hugged the line itself, right? So we basically we had a steep drop, candle close outside, but then ultimately just hugging it kind of underneath that resistance. And now it looks like it's trying to reclaim. So I think just from an overall macro perspective, if we're able to reclaim the lower logarithmic support band and reclaim it and start trading back inside, I think that's a really good sign, in my opinion. So with that said, let's move on now to the regular Bitcoin chart. So before we get into the current price action, I think it's important to note that every bottom in each cycle is going to look a little bit different. And so if you keep going back to previous bottoms in the market, or at least for Bitcoin, and you're comparing them and hoping that it's going to look something very similar, history does often rhyme, but it doesn't necessarily repeat exactly. So each bottom is going to take its own form. It depends on a lot of different factors at the time, what's going on in the world, what's going on in the market as a whole. But one of the really notable things from the previous bear market that we had was the 6K shelf that everyone's familiar with, I'm sure. So we had formed this shelf over a fair amount of time, and then we had that final capitulation, that massive dump, okay, that huge capitulation where it really was the catalyst to the end of the bear market. So I think there's a lot of expectation. The sentiment is that we're waiting for that shelf to start forming again, and people are having a hard time. They're struggling to find it because they're expecting a major capitulation event, typically down to like 10 or 12K. I've seen a lot of, which I don't think is out of the question. I definitely think it's fair game, but we have to trade what's in front of us. And if this is starting to form a cycle bottom, personally, I don't want to be left sidelined. So I do start to take on risk at these levels, and I'm okay with that because when you look at the grand scheme of things, it has dumped 77%. Okay, and that's typically what we see. We've typically seen more than that, 84% on just the last cycle. So it doesn't mean that it has to come down 84%. It could come down 90%, or it could come down 75%. But at those levels, I think for myself, I'm starting to take some risk. Okay, so let's just jump into the daily chart now. So clearly this has been a very powerful move currently that we're seeing. I think it's about a 20% move or something like that so far. 20%, yeah. So, if you're sitting there and you're getting FOMO and you miss this move, it's okay. You can relax. There's going to be many opportunities to get in at better prices than what we're currently seeing. Even if this was our cycle bottom, I do believe that we will get better opportunities to get in for long-term positions than currently where we're at. So let's get into why I think that. So basically what I'm seeing right now is just a simple SR flip or potential SR flip. So we had this shelf, okay? This was our shelf back here when we made our low in June. And, we clearly established this area of support many times, okay? So for me, it's pretty simple. You drag that over. We lost the level. We had a new range form down here with a bearish underside retest of that previous level of support. When you get into the price action down here, ultimately it was just that range, right? So we had our range high up here and of course our range low down here. So we had our swing low and then our swing high, with the EQ being right in here. And so this was a tough time to trade, right? There was lots of choppiness that was just very difficult to trade. We had one swing high, top of the upper band of the range, and swiftly rejected even below the EQ again. Okay, this was a really frustrating time, just hovering. I was hoping for a breakout, but ultimately just trading underneath the equilibrium, came back down, tested this level that I'd marked out one last time, came back up, reclaimed the EQ. This was major. This was a major point right here when we reclaimed that EQ and we started to have that tight consolidation. Okay, these three candles, super tight range, super tight consolidation with another major leg up was definitely a trigger to be looking for longs or have already taken longs. But again, I don't trade in hindsight. I trade what's in front of us. So now what I'm seeing is essentially from this upper band of the range that we had is a major breakout clearly. So yes, there is some inefficient balance in price here. Okay, from these candles, no established support or resistance, just a free fall. So definitely shooting up into there, into that void very easily like butter, which we typically see. But what we've done is we've broken out of this lower end range here. Okay, so the upper band being right here, we've majorly broken out of it now at this point. So the assumption clearly, if you're bullish, is you want that level to hold, which I think, it's getting safer and safer now at this point, the further we push. But what I'm interested in and particularly want to see broken and held is this red zone here. That was established, as we said, from that previous shelf that we had as support that was eventually lost. And now it's looking like it's flipping it back. So essentially reclaim 19K. Let's make it a bit tighter. More confluence with these taps and touches of the lows here with it now. So basically reclaim that level and hold, right? I don't want to see price shoot back down and start doing this again and hovering around it like that. I would much rather actually come up higher still, closer to 21K, and then come down and be trading, having some sort of consolidation really above that level is what I would prefer to see. And ultimately what we'd be doing at that point then is just coming back inside the previous range. Upper band here, lower band in red with the EQ being here, right? So basically reverting back to that previous range, holding the lower band as support, and then essentially trading within this equilibrium and with this upper band. So people say 25K is out of the question. I say it's on the table. No price is crazy or off the table in crypto, I've learned. So just stay objective. So yeah, time will tell clearly. This could also just fail, right? This could definitely, we could have a huge red candle over the next day, and then all of a sudden you're back below the range low, and then we're just back inside ultimately this previous range that we had. And from there we'll have to evaluate and continuously monitor it each day, because new lows are possible still. New lows are definitely possible, and we just need to stay cautious in this market. And what would really be max pain for a lot of people, I think, is having some sort of major push up. Okay, ultimately this range that we're still working with. So ultimately this range that might be breaking out, right? Clearly we've got the 200 exponential moving average still up here. So you take out this high, you break out of the descending channel. I think this high doesn't have much to do with it. You come up, you sweep the high up here, tap the 200 EMA. It's around 23, 24K, and then it's all the way back down, slow grind kind of thing. I think would be max pain. But at the time, if you're looking at that reclaim the 200 EMA, nice, great. Then this starts looking like more and more of a bottom. If we just go back to the previous bottom again, we had, what was this, 100, 200%, 330% push up off of our accumulation zone, all the way up to 14K when the all-time high was 20K, just to find out that price was going to chop around, correct, and then come all the way back down to that level again. So no one thought this would happen. Call it the COVID crash, whatever you want, but the chart doesn't lie, and the price came back down. And I still think this was an area to be retested at some point anyways. We don't typically see such a sharp reversal, but either way, who knows what it would have looked like without COVID. My point is that we could see a major push up still with that larger correction. There's so many different ways you could look at it. You could look at it this descending channel. You could look at it as a descending wedge. You could look at it as this channel, with deviation above, deviation below. You could look at it at this channel that started all the way back here from June with the high, mean back to the reversion of the EQ, another tap of the high, down to the low, revert back to the mean in the EQ, and now possibly breakout. Or you could just stick to straight up horizontals, swing high, previous swing low. Okay, this lower range as well, swing high, swing low, breakout, back into the previous range, as I said, right? So hold this range, target EQ, break the EQ, target range high. So anyways, if this was the bottom, if it is or isn't, I don't know. I'm not going to pretend to know. Like I said, you got to trade what's in front of us, and you got to start getting involved when you're comfortable getting involved with what risk parameters you've set out for yourself. For myself, down at these levels, when a lot of the market or a lot of newbies or normies are bored and they've forgotten about crypto, they were not buying down here, right? They're not. So personally, I get excited when sentiment is low and the market's boring. So I've taken on risk down. I took on risk in these levels as well as these levels. So that's just for me. That's what works for me. I'm dollar cost averaging my different altcoins as well as Bitcoin and ETH. So Ethereum, kind of similar story. Less of a horizontal trend, more of a triangle formation, which is fine. It doesn't have to look the same, but ultimately what is similar is just the fact that we've really tested the previous all-time high, just like with Bitcoin as well, right? So tested on ETH, clearly within this area of consolidation, just over 1,000, did dip below 1,000 briefly. But, the question is if that's going to hold, right? And so if it's not going to hold, luckily we've got quite the low here with ETH around $900. So we've got lots of room to work with still. Underneath where we currently are. But very similar story. There's going to be lots of resistance above that we're going to have to deal with as we push up. But the further we push, the higher the probability of the bottom being in is. And I think for that to be the case, we still have quite a ways to go. For me, the major reclaim on Ethereum was this level right here, like that. Bold in red. So this was essentially that resistance. Okay, when we had our consolidation here, 3 equal lows, 2 or 3 equal highs, breakout, pushed up into supply, resistance, came all the way back down to that level, found it as support briefly. I think this was the FTX collapse, so major deviation, wouldn't have happened without it, but either way, candles don't lie, and now we've reclaimed that level. So that is what I like to see. I think ETH has done that pretty quickly, whereas I'd like to see, as I said, Bitcoin to reclaim that 19K level. Keep in mind, if the tides do shift and Bitcoin really starts to come back down and start dumping, alts are going to pay the price. So right now, I'm very careful to slowly dollar cost into altcoins, although I have been, but I'm very cautious with what Ethereum and Bitcoin does first. So I'm always watching Bitcoin and Ethereum, because if Bitcoin sneezes, the alts are going to bleed. So just stay safe, stay careful. Exactly as I said before, find a strategy that works for you within your risk parameters and what kind of time horizon works for yourself, right? I'm looking into a year plus out. I'm probably not even looking to sell until closer to later 2024, 2025 on a lot of positions. So down in these zones, down in these levels, for me, my risk parameters allow myself to start getting involved, knowing that it's quite possible that we have not bottomed yet and we could still bottom later this year. So just keep everything on the table and try and trade what's in front of you until the bull market is finally here, you guys. So hopefully you found this video helpful in some way or another. I really want to hear from you in the comments what you think. Do you agree or disagree with me? And thanks again so much for joining. I really appreciate the engagement. Please give the video a like to support the channel. And as always, don't forget to subscribe. Thanks again. Cheers.